Hi everybody, thanks for joining me here for this lesson on balance sheets. In this lesson, what we're going to do is we're going to walk through a very basic balance sheet, make sure you understand some of the components of it and how they can be calculated. Okay, so first we're going to start with our assets. And if you remember, our assets are essentially resources that are available to the firm. And we have current assets and long-term assets. Okay, and our current assets tend to be things that we have access to in a very short time period. So in this example, under our current assets, we have cash, which cash is pretty obvious what that is. That's our financial capital that's readily available. Okay. Then we have our accounts receivable. Accounts receivable constitute bills that we have given to our customers that are yet to be paid, but that we expect to be paid rather quickly. Okay, so we're expecting in this case our customers to pay $52,000 in back bills to us in a very short period of time. Then we have our inventory. Okay, and what our inventory constitutes is basically anything that we have that we're using to generate revenue that we don't expect to have after we sell it. So if I was running a retail store, all the products on my shelves would be part of my inventory. If I was running a factory, the materials that I'm using to produce products, that would be examples of my inventory. And then we have prepaid expenses, which is basically anything that we've paid for that we haven't received yet. Okay, and we add up these things here, and we're going to have our total current assets. So I'm going to go into this box, and I'm just going to add my cash to accounts receivable, to inventory, to prepaid expenses, and that gives us our total current assets of $1,248,234. Okay, then we have our property, plant, and equipment, which is really like our long-term assets here. Okay, and the total value that we have for that right now is about $2.4 million, you can see here. And then we have something that says less accumulated depreciation. Now, what exactly does less accumulated depreciation mean? What that means is we have some capital resources that we purchase that aren't worth today what they were worth when we bought them. So for example, maybe we purchased a forklift for $150,000 10 years ago. That forklift is not going to be worth $150,000 today. So there is going to be a discounting process that we take off that. That forklift may only be worth $30,000 now because of the wear and tear and the hours on it and things of that nature. Okay, so our accumulated depreciation reflects that discount that we take on materials that have lost value over time. So as we want to calculate our net property, plant, and equipment, all we do is just simply add these two numbers because our accumulated depreciation is negative. So I'm going to go into this box here, and I'm going to add my property, plant, and equipment to my accumulated depreciation. And you can see that our net property, plant, and equipment is $1.9 million roughly, which is basically this 2.4 minus this $2.4 million minus this 400,000. Okay. Then we have our other long-term assets of 5.5 million, and we're going to add them in here to get our total for our long-term assets, or total plant, property, and equipment. It's going to be the 1.9 million plus our other long-term assets. And that gives us just over 7 million, about 7.5 million dollars. And we're going to take this and we're going to add it to our total current assets, and that is going to give us our total assets. So again, I'm going to go total current assets plus total plant, property, and equipment. And that gives us total assets of $8,752,295. Now we're going to move down and we're going to take a look at our liabilities here. Okay, and in this case, we start with our current liabilities. Okay, liabilities are, remember, liabilities are costs that are incurred to outside stakeholders aside from shareholders' equity. Okay, so our current liabilities are things that we have to pay in the very near-term future. So we start with accounts payable. Okay, so maybe we purchased some product and we haven't been paid for it, but we have bills for it. That's an example of accounts payable, and we have $685,000 in accounts payable here. Wages payable refers to work that our employees have done, but we haven't cut their paychecks yet. So for example, if you have a job, typically you work 2 weeks is part of a pay cycle. Then there's a week for processing paychecks, and at the end of that week, you get paid for the work that you started 3 weeks ago and finished 1 week ago. Okay. While we're waiting to pay our employees on that work that's been performed, that constitutes wages payable. And in this case, we have $448,000 in outstanding wages payable. And we also have some current liabilities in terms of taxes of $230,000 here. So if we wanted to calculate our total current liabilities within this balance sheet, all we're gonna do simply is we're gonna take our accounts payables, we're gonna add them to our wages payable, and add those to the taxes, and that gives us $1,364,000 in total current liabilities. Okay, then we've got our long-term liabilities here. We've got some liabilities on a long-term loan that are almost $4 million and just about $500,000 in other long-term liabilities. So to get our total liabilities, what we're going to do here is we're going to go in and we're going to add our current liabilities to the two different boxes that we have under long-term liabilities. And that shows us that we have $5,844,889 in total liabilities. Okay, as you would figure, our total liabilities are considerably less than our total assets. So the last section of our balance sheet here that we have to go through is the stockholders equity section. Okay, and as you can see, we can see how much outstanding common stock there is here, but we do not have information on retained earnings, total stockholders equity, or total liability in stockholders equity. So the question then becomes, how do we figure all this out? So we're really quick going to refer back to the accounting equation. Okay, we want to remember that our assets are equal to our liability plus equity. So if we go back here, we see liabilities plus stockholders equity. This is going to be equal to our assets. So we're just going to go put an equal sign in here. We're going to scroll back up to our total assets. And now we've got that box set at $8,752,295. Okay, now we got to figure out our total stockholders equity. Okay, and as we look at total stockholders equity, we know that that is going to be our total liabilities in stockholders equity minus our liabilities. So we're just going to go into here and we're going to create a little equation where we're going to take that total liability in stockholders equity and we are going to subtract our total liabilities from it. And that gives us our total stockholders equity. So our total stockholders equity in this case is $2,907,406. Now the last box that we have to fill out here is our retained earnings, and we know what our total stockholders equity is. In this case, this balance sheet was built so that our retained earnings were just common stock plus retained, so that our total stockholders equity was just common stock plus retained earnings. So to calculate our retained earnings here, we are just going to take our total stockholder equity and we are going to subtract our common stock. And that's going to give us retained earnings of $365,479. All right. So thanks for joining me here for this lesson on financial statements, looking at a balance sheet. I hope you enjoyed, and we'll talk to you soon.